Hello, guys. Welcome to the first official training program for um, analysts and interns at excuse me, at Teekay Henry. My name is Tolu, and we'll be taking the basic accounting setup training. So let's see, let's go, let's go, let's go. So we're going to be looking at creating chart of accounts, journal entries, account receivables, and account payables. And I started with a quote that says, when failure is not an option, success is guaranteed. Appreciate baby steps. All men used to be kids. So basically, what I'm just trying to say is the fact that everybody started from somewhere. People have failed at different things that they've done, So we should embrace failure. We should embrace mistakes. It's what actually makes us grow as human beings. And Tiki and Henry, we have created an atmosphere for people to actually express themselves. So if you fall short in certain areas, it's not the end of the world. There's always going to be an opportunity for you to grow. That's basically it in a nutshell. All right. So under creating chart of accounts, we're going to start with the introduction, give you an insight into what it's all about. We're going to create and edit accounts between account times and the income statement. So when we talk about chart of accounts, one of the things that we actually talk about, the comes to our mind is, you know, um, how much how much is the organization worth? Where are they going? How much profit are they making? How much are they selling? So we need to approach this, from a very holistic point of view. When you are given an assignment to help an organization and to set up chart of accounts, one of the things you want to be thinking about is, what are my objectives? What is the end result? You know, what do they want to see? All the daily reports that we do every day, they're only made possible because a chart of account has been created. And I'll give you an example. Say for instance, the bank account. The bank account is part of the chart of account. Without the bank account, you can't do any posting to the bank. You know, expense account. That's expense account. There's different types of expense account. You know, you might decide that you want to create specific accounts to capture certain categories of expenses. You can have local travel, international travel. Local travel is, within the state. When you take Uber, that's an expense. That's captured in a chart of accounts. You have to create a chart of accounts to be able to relate to that. International travel is also an expense, but it's a different type of expense. So it now takes us back to the business requirement document and understanding the scope when we are when we're taking an approach to setting up a client. You have to have all this information. If you don't have all this information, where do you start from? You don't go start setting up a client, setting up an account, and you don't have all your boxes ticked. All your boxes should be ticked. In the chart of accounts, you're going to have a fixed asset. You're going to have your assets. Under the assets, you're going to see different types of assets. You're going to have liabilities. So these are the things that you need to always put into consideration. So talking about the important chart of accounts, um, also created chart of accounts, creating group accounts. Um, Sometimes the OYA Sync has the import tool where you can actually import. There will be a template in which you can actually create and import the chart of accounts into the system. But by default, when you set up an account based on the domain, based on the domain, um, the OYA Sync would automatically create those chart of accounts. and we can subsequently now go in there and um, make some edits. So this basically just shows, gives you an idea of what the chart of account looks like. You right now they're trying to create a bank account. So under the bank account, you have under bank accounts, you have different banks. You have Axis Bank, you have Bank of America, you know, different types of banks you have there. So the, so there are different yeah, so different types of things that you actually have there. So what I'm going to do now is that I'm going to go into we're going to actually take a look at a chart of accounts. You know, um, yep. So that's what you can see. Okay, so basically, these are the different accounts that we have. We call them groups. We actually group differently. So if you click on this one, it's a application of fund. You have current assets, you have fixed assets, you have the investment. You click on current assets, accounts receivable, bank account, cash in and loans, and advances, securities, and deposits, taxes. Click on accounts receivable. You have debtors. Now, under accounts receivable, we can have different, child accounts under accounts receivable. If we want to categorize, if we want to be very, very clear about the kind of accounts receivable account, um, you're looking at a situation where you want to, so using debtors, you can actually say maybe um, we do we do a lot of business with, let's say, let me even see, with zero accounting, you know. Or like Treasury accounting is not a good it's not a good example. We do a lot of business with, say, who's our major vendor now? So let's take Coca-Cola. We buy a lot of Coke from them. Just imagine we do a lot of Coke. We sell a lot of we do business with Coca-Cola. Instead of just having debtors, we can actually categorize our account to Coca-Cola. So that by the time we are running our reports, we're being very specific. We can have like five, six, seven different, customers, and that's where we can actually, track exactly what they actually owing us. We also get to I'll go into accounts receivable index as the program goes. Then come over here, you see bank accounts. So this one says GT Bank. So you can if you notice with other clients that we have, like Project London, you will see that they have different accounts. They have GT, they have Polaris, they have all the banks. They have all of them there. So this um this is this is like this is actually helps us develop the reports that we end up seeing on a day-to-day basis. If we don't get this right, the reports are going to be all twisted. So we said these accounts are classified as follows: income, expense, asset, and liability. So you can see the categorized. You can see how they are, how it are all be categorized. So we're talking about account types, explaining account types. So there are different types of accounts. We have accumulated depreciation, we have assets, we have bank, we have cash, we have chargeable, capital work in progress. I'm not going to go into all these details. Just for you to actually have it, and you can always go back to it and look at it. Then yeah, so basically on chart of accounts, this is an idea, and I think we'll go into some level of discussions now. All right. So do we have any questions? Any questions?
So,
No, sir.
No, sir.
Okay, you guys don't have any questions. All right, that's fine. Um, okay, so we'll go to okay, so we do go into journal entry. I don't know what's happening using share. Okay. All right, so we're going to talk about journal entries right now. And does anybody here understand? Can anybody here give me an idea of what a journal entry is? Titi Lion, can you explain a journal entry?
Yeah, so good afternoon, everyone. So for me, I think a journal entry is just like more like a place where you can make records of certain information to post them to their original account. That's what I think it is. So if you want to make a quick entry for some particular things, then you can use the journal entry. So it helps to like post directly to the accounts that you want them to be posted to.
Okay, so that's awesome. So basically, journal entry is one of the best tools if you know how to use it. It makes your life easier, especially when you're using OS Sync, especially when you're helping clients to set up their account. When you're doing, especially when they're just starting, there's certain information that would have been done in the past or must have been omitted through the normal sales or purchase channels, and you want to go to the back and edit it. You can always just create a journal entry to that effect. So yeah, it says a multi-purpose transaction where the debit and credit accounts are being set can be selected. So and the thing about it, a journal entry, it has to have multiple corresponding entries. So for instance, if you want to debit in a particular account, you must do a corresponding credit for a different account. Um, so it says used for entering expenses, opening entries, contract entries, bank placement, bank payments, and excise entries. Excise entries has to do with like custom duties. So basically, there's a form. There's a journal entry form, and we're looking at the features of the form. You know, so okay. So, now, another thing I want someone to focus again is the reversal. So basically, you can create a journal entry and you can also reverse the journal entry. So, for instance, you mistakenly posted to the wrong account. You want to debit cash and credit bank. And you credit the wrong bank account. You can actually do a reverse journal entry. So basically, there are certain things that areas where you can actually use for general entries, plus sales invoice or purchase invoice, sales orders, purchase orders, expense claims, asset loans, payroll entry. Um, Now, payroll is a very interesting one, and I think this is where I want to discuss this one with Teekay. It's because I don't think we have done that update yet. Um, Let me see. I don't think I. Hmm. Okay, so collecting employee salaries, the general entry type is used. In this case, you debit the salary component and you credit the bank account. So this is something in which instead of going through the whole process of, say for instance, you've already missed the payment cycle for payroll. Instead of going back to start, running payroll all over again, you can actually just go there and do a journal entry, and let's get it over with. Do a journal entry for all employees and just and push it away. Then bad debt, which is also a very, very interesting one. Most of the time, we have customers that we know they will not pay again. You know, they paid 60%, and the guy doesn't use the software anymore. You want to write it off. You can create a general entry to write it off. Depreciation. Sometimes you might just decide that, okay, at the end of the year, the client might say, you know what, instead of doing using one of any of the depreciation methods, at the end of the year, let's apply X amount of money, you know, X amount into this asset. You can do a journal entry, to that effect. And let's let's come over here and look at what it looks like. Okay, so yeah, so looking at what we have here. So basically, you can have a template for a particular. You can create different journal entry templates so that you don't have to type in all the things all the time. Now, when it says account, it's talking about the chart of accounts. Which account are you referring to? Party type. Party type becomes the customer, um, customer, vendor, um, employee, you know, vendor is actually supplier on OSM, party. Now this is where you now, put a name to that effect. Say for instance, if you use say employee, the party's name is going to do, let me see, only employee that we have on OSM now is test admin. Let's see customer. A customer, these are the customers here. Yeah. So wherever there's let's let's even look at salary or your thing, party type. I think we don't have anything linked to not done anything for salaries yet. Let me see. Open an expense. Okay. Let's say sales expenses. All right. Let me see what it's saying. Mm, no, don't put a doctor for this one. This one. Mm, okay. So apparently, um, this is this is basically linked to items that or it's linked to already transactions that are already been um, that have already been created in OyasSync. So if there's really no transaction, then there's no way you can actually make a journal entry. Existing transactions that need to be updated. That's basically what how we can actually use journal entries. You can see basically we created a debtors account. Customers actually came up, you know, say okay, so let me see. Let me see if we can even get mm, okay, so they put 5,000 naira. Mm, okay, so with the corresponding entry already. Then we put a reference number, put a reference date, so that whatever it is that we do, you can always go back there and refer to it. was this transaction made? Was it by cash? Was it by bank or whatever it is? Due date. It's gonna go off now, and I'm gonna actually have to. We're gonna use the same link, and we're gonna come back with the same link because we have less than 1 minute left. Okay, let's look at the ledger. So what's happening there? All right, guys. So it's gonna go off, and you guys should log in with the same link. See you guys in a minute. All right. Bye bye.